You're one of the great experts in commodities. We've had a big run up in commodities this year. Oil, of course, copper, aluminum. They've all topped out, though, about a month ago here. Your thoughts on commodities right now?
Yeah. I mean, I think this commodities is not a short-term blip. I mean, if you have commodities in your asset class, I think the way to think about what's happening now is part of at least what we think is a 5-year trend. And it's sort of like the beginning of the 2000s. You had a decade-long bear market, which means there's a lot of contraction in supply. Basically, capital is not going to commodity producers. And at some point, you just hit rock bottom. And probably rock bottom was oil futures hit negative prices last summer. And so we don't think, the financial markets move second to second. Commodity production takes years. A copper mine takes 5 years to get going. So it doesn't matter how much we talk about it. We do think that this commodity trend is not just a return to work trend. We think it's part of a 5-year supply and demand cycle. And so it's not going away. And we wouldn't be surprised if we saw a $100 oil price. How fast it gets there is anyone's guess. The fact that it's paused a little bit is fine. That's what happens in financial markets. You need to shake out some of the weak hands, and it had overextended anyway.
$100 for what makes you think it's going to go to $100? What's going to drive it to 100?
I just think we have to move away from these old paradigms and old limits. It passed $100 in the last cycle, so it certainly can get there again. You've had a lot of rationalization, a lot of merger activity with oil companies. There's not that many, base metals companies. You have more demand now coming for green metals, right, which is the electric vehicle trend. And you're just not going to have, Wall Street is not letting companies add to supply quickly, even if they could. The way I think about it is these energy companies need to earn back their way into investor portfolios by paying dividends. This is a theme that we've been talking about for the last several years. They're probably not hyper-growth sectors,
kind of startled me a little bit there, but I don't know if you have any thoughts on that. Is commodities an asset class for the average investor? We always debated whether it should be. And should you? How would you recommend, or what are you telling your clients they should do with commodities?
Yeah, Bob, if you believe in diversification, then commodities is an asset class that you ought to consider. You don't have to like it. You don't have to like all the asset classes in your portfolio. That's one of the fundamental arguments for Bitcoin and digital assets. I don't care if you like it. You already own assets in your portfolio you don't like. That has nothing to do with owning the asset because it adds diversification, which lowers the risk of the portfolio and provides the opportunity for outsized returns. So sure, you should own a little bit of oil and gas and natural resources and precious metals and commodities as part of a diversified portfolio.
So let me just segue a little bit here about commodities and inflation in general. What are you telling your clients about inflation right now? What's the right way to think about it? Are we going to return to modest inflation of 2%, or is higher inflation somehow stuck in the system, and what would bring it down again?
Well, I think everyone's pretty much resigned to the fact that there's going to be a return of inflation. As the economy heats up on a global basis and demand heats up and we're moving more and more consumers worldwide into the middle class, they become literally that, consumers. And as there's more demand for products, there's more need for raw materials, and it gets more expensive to manufacture, produce, deliver, supply chain issues. So it's reasonable to expect that we'll continue to see an increase in inflation. But does that mean it's going to be debilitating in the economy, that it's going to destroy corporate profits? Is it going to wreck the economy? I don't know that it will, and I don't know that that would be a long-term scenario. So, yeah, there will likely be inflation that we're not used to. Yeah. Don't let it freak you out.
Yeah, what about you? We're already seeing lumber and copper prices come down rather notably. It is supply and demand. The Chinese are aggressively out saying, we don't want these prices too high. Now you've got somebody on the other side, a government, the largest consumer of commodities in the world, basically saying it doesn't like the prices this high. Are we stuck with permanently higher levels of inflation?
Well, what we do, we try to differentiate between commodity price inflation and wage inflation, right? Lumber will go up, lumber will go down. Commodities themselves are not a big expense item for any business, for most businesses, I should say, or for most consumers. But what does matter to sticky inflation is wage inflation. And so that's the raging debate I think that the markets are having, but I don't think we'll know until 2022. Of course, there's a one-time now. Everyone's trying to get more workers to their businesses, whether it's airline pilots or waitresses or what have you. The real question is, are expectations going to keep rolling through the economy in 2022 or not? There's a big debate. The other side of the debate is no, technology keeps driving costs down, and we'll be back to this kind of tech-driven world in 2022, and people will forget this return from work cycle. So that's why we differentiate between commodity price inflation and the sticky wage inflation.
He does have a point about wage. I mean, look,
Right.
lumber, if my brother's a home builder, he's been furious about the price of lumber, but it's coming down, and now he doesn't have to charge as much as it comes down.
But he's having trouble finding workers.
But it's when you're paying a guy, pick a number, $12 an hour, and then you raise it to $16, it's a lot tougher to say, oh, now you're making $12. You're not a lumber. You're not a piece of lumber.
Absolutely right. So it is going to be an issue. And of course, let's remember, that's only one part of the troika. In addition to inflation, you have related to that interest rates and tax rates. So all three are combining to create this perfect storm, talk about triple witching, that we have yet to face. So all of this is coming. We know it's coming. We just don't know when, how much, and on who it's going to hit and how long it's going to have an impact.